Everybody wants to be successful, and yet we all have different ideas of what that is. Finding success is the journey we embark upon to go and get what's ours. We are willing to travel down within to find our greatness buried deep inside of us, questioning society's views and flipping the script, putting our own stamp on life. We're here because our future is within our control. Finding success is how we grab hold of what is possible. The relentless pursuit of success starts here. We're finding success, and we're here to help break that monotony of your life and help you find your version of success. Welcome to another episode of the Finding Success podcast with me, Alex.
And me, Adam.
This week, episode... This one.
36.
36. What's this week going to be about? So this week, we've changed it up. We've gone for interesting stuff in the market. So obviously, it's April now. This quarter's just disappeared, hasn't it? But it's April now, new financial year in the UK. I think it's the same in the US, is it not? Or do they run different financial year?
Not for me. Don't ask.
Okay. The UK is the beginning of our new financial year. So we're looking into we're just looking into stock market and telling you what we're going down. Telling you what's going down. So I've got 3 things I'm going to talk about, and Adam's got 3 things he's going to talk about. And hopefully you'll find it interesting. You know, a bit of education.
We know you'll find it interesting.
Adam, so let's start with you. We're going to start with one of your topics, right? You've got, I believe, if I'm correct, you've got a shock, a surprise, and a pick out of the market.
Yeah.
Different stocks. So, let's start with the shock. Everyone likes a shock to wake them up on a Monday morning.
Right, my shock. By the way, before we get started.
Oh.
How you been? You been all right?
Yeah, not too bad.
We had a bit of a mare, didn't we? Now we're rolling.
We've had a nightmare.
It's currently we're not. Well, it's late, but we're recording, so that's the main thing. We kept our cool-ish, and it's now working, and it's all okay.
We've put out fires and saved the day.
Yeah, we have indeed. We were going to record this episode as well, guys, but we've decided against it for some reason. But be ready to pay attention. So video record, not actually record, because we're currently recording this. But we're going to start filming our episodes as well. So go and pay attention to our YouTube channel. If you're not already subscribed to it, go and subscribe to it. Link will be in the description box down below. Also, our social media will be below as well, and that is when you can keep up to date with us and find out when our podcast will be coming out. So my shock, and I think people who are involved in the financial markets, it's quite a common shock to everyone. And if you're in the vehicle sector, EV sector, as we know, the world is changing and we need to change with it. So my shock is all EV companies, in general. Maybe not Tesla, because it's a little silver lining.
Its own thing.
Yeah. But majority of EV companies that have stated that they're going to make a vehicle, and maybe they've got a contract with Uber or UPS or a big brand, and they haven't actually released a vehicle, or a vehicle isn't on the road. They're not true to their word. They're missing deadlines and so on and so forth. My company that I'm going to go into is Arrival. For those of you who doesn't know what Arrival is, I'll quickly just give you an insight. What Arrival is a company in the UK, or based in the UK. Sorry, they're trading on the Nasdaq. There you go. And they're a new EV company. 2015, I think they came out, didn't they? They were sort of founded in 2015 as an Arrival company. They've been involved in electric vehicles for some time. We won't go into too much detail. But they had a contract with UPS for 10,000 vans, which were a similar sort of size, different size, all variety of vans. And they're going towards the market of electric courier vans.
But like a special, their selling point was like a special composite, wasn't it? So they could almost build a micro factories, that they called them, put them in any city, and you could custom build each micro factory to build a certain type of van for that certain city that it's been. So the premise was fantastic.
Yeah, it was. And they were all controlled by robots as well.
Yes.
It was a whole section was built around automation and ease of use and less controlled by humans and more controlled by robots. And it was a very, very appealing company to a lot of people.
We shouldn't say was. It's still going, the company.
It's not dead just yet.
It's still it's a very good premise, a very good concept.
And I think as well, it's quite a new business model. Yes. There's not many companies that use that business model in this world. So it's very appealing for a lot of people. And I think that's why initially it was quite hype when the IPO came out and they saying that, we're going live, so on and so forth. Now, whether that was just to generate cash is probably quite a big one. But when the company first came on, it came in at quite a good price. I think it started around $25, $26. And it peaked at $36 now, which is fine because, people are obviously interested and happy about this stock coming out. But they never, ever, ever released a vehicle. At this point, the vehicle never hit the road. It wasn't tested. It was simulated and it was built, but it never actually went for a road test. It didn't. I don't think it was even driven around the workshop.
No, they had one in the factory, didn't they? But they never. This was the bus, wasn't it? Was it the van?
This is the bus. Yeah.
This is not the van yet. And again, by the time they went public, there was no earnings.
No,
this was
nothing
all still cash.
And there's still no earnings to this day, is there? I don't think.
Not that I know of.
So you've got a company here that people are buying as a pure hit and hope that one day it's going to skyrocket like Tesla.
Blow, yeah.
And unfortunately, that hasn't happened yet. People are still interested in the stock, and I remember a click on YouTube once, and there was just endless amounts of analysis on Arrival. So the peak of the company, sorry, before I get into the peak of the company, I was actually very interested in this stock as well. I thought, this is great. Let's jump on the bandwagon early, and we can make some serious gains here, because it just makes sense.
Yeah.
It's just there for the picking. So why would not take it? So the high of the stock was 36.21 cents. Okay, which is it's not high for an EV company. Look at Tesla. Tesla's ridiculous. And that was the 7th of the 12th, so December 2020. So after the big dip of COVID, basically.
Yeah.
Was its high. And as life got back to normal, whether people didn't really care about it or whether it was just on the back burner, I don't know. But people started to sell, and its low reached £2 or $2, and 91 cents, which is nothing for a company that sort of size. And when I say size, they have a massive workshop. They've got loads and loads of microfractures. The assets they've got is quite considerable. And that was on the 28th of the 1st, 2022. So it dropped 91% from 36.
That's a bit of a shock.
Unbelievable.
Mammoth.
And imagine if I actually bought into that. I think I'd be crying in the corner by now. Do you know what I mean? It's ridiculous. And that was over a course of 491 days.
I remember we were looking into it. We were like getting quite excited. We thought we'd seen something great, seen like
the next
the
unicorn.
Messiah. Yeah, exactly. We're like, we should get into this. We should get involved. And it's just like, no, let's just wait. Let's just see. There's no rush. If it's a good company, it's still going to be a good company in a year's time.
Yeah.
But we just held off, didn't we? Then we started seeing it just start to crumble, like absolute crumble. Then as we started seeing it drop, just like, let's just keep watching it. Let's just see where it's at.
Yeah.
And it just didn't stop, did it?
We were looking for points of entry. And then when we got serious about it, we analysed it and we looked into it and said, well, what's the actual financials? Where does it come into the fact that we should buy it? And we never actually, you never actually found anything, did you?
It's so because it's such a new company, they've got no history. Right? It's a brand new public history. Just like when I like to compare companies compared to Apple. When you're comparing, looking into companies, Apple is so transparent. Everything you need to know is out there and on a database, so you can find it. Whereas Arrival was a completely different ballgame. I had to do some serious digging on the internet to try and find out any information, and that's when we found out there was zero earnings, zero revenue. There was no revenue whatsoever. It was all just from the internal investors, the owners, and so on and so forth, pumping it full of money. That's paid for this factory and all the assets they've got at the minute. It's all internal, which was worrying. As well as they made a load of more stocks available, didn't they? I think they didn't do a stock split, but they released a load of stocks from insiders,
internals, yeah,
and just all these flags just started going. Hang on a minute, I can't find out enough. I can't find out enough about this company, so I can't invest.
Yeah,
simple as that.
But yeah, the reason for buy-in wasn't there. So it's simple. You follow your rules.
No matter how great it looks, how confident you are it's going to go to the moon. If there's no hardcore, fundamental, quantitative facts, just not going near it.
No, exactly. And now, current day, which is the 26th of March, it's £4, $4.10. The last time I looked, so
still under the
it hasn't climbed anywhere, shape or form. It hasn't, it hasn't recovered. It may recover, and maybe when they release an actual vehicle and you can see it on the road and it's out there driving around, it might recover. But that's my shock. All EV companies, in conjunction with this one, where we're picking that.
Was the particularly bad one.
Yeah, there's a few. Riven, I think it's called Riven.
Yeah, but they're quite a big company.
They're a big company, but you've seen the share price.
No,
it was like 400-500, and it's now down to. I'm not going to lie, I don't really know, but it's dropped a lot in price.
But we both know that's not necessarily.
It's not.
Doesn't mean.
How many Rivens have you seen on the road? Yes, in America, there's probably quite a few, but even in America,
I was thinking of Rivia, I think.
Or Rivia? No,
Rivia. They're the people that make the trains, the London.
Maybe
Tubes. Maybe it's a different company. There's no N in it, so I'm thinking of a different company. I don't know what a Riven is. I'm honest. Is it the truck?
Yeah, it's like a Jeep truck thing.
I thought
it's
that
an
was
American
one. Revan.
Anyway, they've dropped in price. So yeah, it's just general, and I think general EV stocks in general, I thought they'd be further along than what they are currently.
Interesting. So I'm going to go on to one of my topics.
Go for it.
I'm going to talk about dividends. Because dividends make me happy. As you'd have heard in the last episode, if you did listen, the Oracle of Omaha, we just spoke about how much Warren Buffett makes in dividends from Coca-Cola. And we had a few DMs and so on asking, can you go into what dividends are? I'm like, yeah, no problem. I'll give you a quick masterclass on what dividends are. So dividends are basically it's basically a reward scheme that companies give out to their investors. Right? It's literally, and it can come in a couple of different forms. Come in cash forms, so like you earn X amount of stock, you'll earn X amount of dividends. You get paid cash for owning those stocks. Or I didn't know this, but some companies give more stocks, more shares as a dividend payment, which is quite interesting because obviously then it's sort of forcing them to reinvest in the company in a way, but without giving them that. So you earn more shares, you own more shares in total, then you earn more in dividends as a share. So your shares multiply. It's interesting. I don't know many companies that do that, but apparently it's a thing that's possible.
It is indeed.
But yeah, it's essentially a reward scheme, just like your Tesco's Club Card points. You earn a certain amount, of points, and you get money back for it, basically. And that's exactly the same as what a dividend is. Anyway, so the board of directors of each company normally dictate whether or not a company will give out dividends, and the dividends come from net profit. So the company has it makes so much money from doing X, Y, and Z. It has $300 million profit. It will allocate a certain portion of them to reward their investors in dividends. The rest of it is what they call retained earnings, and that's what they keep as themselves to reinvest into the company to grow and to develop and expand and so on. So it's really important. So this is where some companies can sometimes go wrong and pay too much of a dividend. And certain investors like me and you will look into companies and see what their dividend rate is. And if it's really high compared to their profits and so on, it sort of throws up a flag like they're not investing that heavily in themselves.
Yeah.
Sometimes a good thing, sometimes a bad thing. So it's just one factor to think about when you're looking into companies. As well as some companies will keep paying their dividend even if they're not making that much profit. So this is another difference. Companies will keep paying them to maintain their record of paying dividends. It just looks better on their books. It keeps their investors happy because sometimes that's all people invest for is dividends, because it might not necessarily be a growth stock, but it's a solid company like the likes of Walmart, Tesco's. I'm not sure if Tesco's pay a dividend, but Walmart's probably the best example. You're not really going to grow Walmart into a huge company. How can it grow from where it is?
Yeah, it's
unless it goes into some subscription service or anything like that. You can't. But it's solid because people go there all the time. just like you do Tesco's and Sainsbury's and that, people go and shop there. It's amazing. When I go into my local Tesco's, there's cars constantly queuing up to get in that place. Like, they may not make amazing money, but they're going to always make money.
Yeah,
it's always
there's always customers coming through the door.
Exactly. So it's just consistent, and they're the type of companies that pay dividends because they know they want to reward their investors and keep the money coming in so they can expand. But it's a slow rate of growth compared to normal companies. I don't know if that made any sense. Did it make any sense?
Yeah. Well, I mean,
give you a rough idea.
I think it's very, very the simplest way that you can describe dividends. Really, it's very, very easy for someone that doesn't know what a dividend is to understand, and that's the goal.
Yeah, exactly.
That's the goal.
Could go into more depth, but then you got to be more financially literate. And we're teaching. Slowly.
We're easy going on this podcast. We're easy going.
Easy Monday morning listing.
What was your next topic? What else did you have? Obviously, because I had a surprise.
Okay.
What was your surprise?
Right, so my next two topics are going to be the stock splits that's going on.
Okay, yeah.
Or just happened, actually, because it's now April. And Tesla.
Yeah.
Can we go?
Go.
Which one do you want to hear?
Go. I want to go for the stock splits first. I want to
stock splits.
Yeah.
So there are two stock splits happening in the markets in the S&P 500.
Yeah.
Standard & Poor's 500 in the New York Stock Exchange. And that is Google and Amazon, right? So I don't know if any of you listening are into investing. You've looked at the price of what Amazon and Google are currently trading at, and it's pretty offensive. It's like, if I'm correct, Google is around 2,800,
yeah,
and Amazon is 3,200, roughly, give or take, 100 quid. And that's quite a high price, for a URI, average retail investor, just to be able to put a good sum of money in, because compare that to the likes of something like Intel or somewhere that's trading at $50 a share. You just can't buy the same amount of shares with with a small amount of capital. So I personally think, this is what I wanted to have a debate with you about. I personally think it's a really good thing for everybody involved, right? So just to let you know what a stock split is. It's when a company increases the number of shares available to the public. It's quite literally doubling or tripling, depending on the ratio of how many shares are available. Now, I think it's quite exciting because it means the more normal people like me and you can play with these companies. So these particular stock splits are 20 to 1. So if every one share, say if I owned 1 share of Google, I will now, after the stock split, I will now own 20, right? Which, fantastic! 20 times 3,000. That's huge. Not quite. The stock split doesn't actually affect like the market cap, the total value of the company. All it does is basically essentially dilutes the amount of what a share is worth.
Yeah.
However, say if I owned that share of Google before the stock split, worth £3,000, after the split, it will still be worth the same £3,000. I'll just have 20 of it.
Yeah, basically all it is doing is increasing your number of shares, but your price overall in the company is the same.
Exactly. However, this is where I get quite excited, because I could see loads of other investors going, Amazon, Google, very, very good companies. I'm going to get involved in that. And now I can buy it for $150 a share instead of $3,000 a share. So they might go and buy 10, 15, 20 shares. Boom. Immediately, I think, so we recorded this before it's split and it's gone live. I think you'll find it rocket up to over $200 a share, both companies, because people will just jump on there and get involved, which it's good for small retail investors because they're getting involved. It's good for Amazon and Google because they're getting loads more investment, and it's good for current shareholders because their value of their stocks going up massively. So it's an all-round win, in my opinion.
For me,
hit me.
So can you tell me what the price of Amazon increased ROI over the past 12 months?
I can't.
No, I can't either. But I can tell you that it's going to increase the people buying because people are going to buy Amazon. If the stocks are diluted, it's at a lower price. People are going to want to buy a good company.
Yeah.
However, me being the value investor that I am, or the growth investor that I am at this current stage, I look for companies that will grow. And not saying that Amazon won't consistently grow, because it can and it will. It's just getting bigger and bigger. However, it can only get so big.
Okay.
look at Google. Look at Apple. They're just absolutely mega companies that continue to grow and grow and grow and grow. And if you look at companies 20 years ago at the highest earners, and then 20 years later, I think there's only one or two companies that are still in it, maybe even none.
Yeah.
So realistically, yes, it might be a good investment, but will all those companies continue to grow at the same rate?
Good point.
They will. Of course they will. But for how long, number one? And at what rate will big investors go, well, this is not worth my time anymore. I've got an outstanding number of shares in Google that are, they're worth good money and so on and so forth. But all that's happening is it's going to be like a GameStop, sorry. Whereas you're just going to get people that are just going to pump and buy. And they're going to be happy as Larry because their price is just increasing. When is the point that they're going to get out?
So
because they've got such a big ownership of that company, when they do get out, the effect is going to be massive on people that, like me or you, the people that own 10, 20 shares. The people that get out and own, I don't know, 160,000 shares. That's an exaggeration.
So like funds.
Yeah, exactly.
When they sell, so S&P 500 funds, I think Apple make up, normally, if you look at their breakdown, Apple's a good 10% of
it's massive.
The funds.
Yeah.
Which is offensive because should they just sell 50% of that stake? Well, if a few funds do that, it will drop in price massively.
Yeah.
Is that what you're saying, basically?
Yeah, exactly.
Should they all just decide to go, yeah, no, I've had enough of this, I'm going to drop my stake to 2% of what this fund's going to hold?
Because it happens. All big investors decrease their stake in stocks.
At some point, yeah.
Michael Burry decreased his house shorting thing in 2008, wasn't it, when he decreased his overall price? He decreased it. He wanted to sell, get rid of his position.
Yeah.
There's going to be points, I think, where they peak and trough. Obviously, it's common. But when those big investors do get out and the retail investor that isn't very smart, no offense to people that are not buying the dip, but when they do sell, are they going to get scared and sell and continue to go down and keep selling and selling and selling? And the market's just going to crash because it's such a big company.
Yeah, but there are certain, the SEC just do stop that.
They do.
Not in certain, it will stop it from having a crash. But you're right, actually, that's a very good point. Apple is almost a bubble in itself. We just discovered Apple as well.
I'm not saying that because I think it's a great company.
It is a great company.
I will continue to buy it. But it just seems weird to me that the big investors would be happy with the split. That's what I'm saying. It's good because it allows people like me or you to get involved in the company that I like.
I'm going to bring you back to Coca-Cola.
Go on.
We were speaking about it in the last episode. But Coca-Cola last did a stock split in the early 2000s and still going strong now. Still paying a monster dividend. It
is indeed. But how many people talk about Coca-Cola today?
Very few.
Yeah.
But imagine when they first did the stock split. Do you think it'd be people have this conversation like we're doing now?
Yeah, they probably would, yeah.
Maybe not so.
But, yeah.
And maybe not so much because we're in a different age. There are more retail investors now more than ever.
Yeah, true.
How many was it last year that joined? 100,000 new investors?
Ridiculous, yeah. It's now really available for everyone, isn't it?
Exactly. You've got it in your pocket all day long. You can invest. So maybe that's going to have an effect on the future of it as well. Who knows?
Well, we shall see. Maybe I'll eat a bit of humble pie. I don't know.
But we won't know that for a few years after, because you're looking long term.
Yeah,
I'm 5-10 years down the line.
My point was being is that why would I buy? I got off on a tangent. Why would I buy Google? That is a company that, yes, it could continue to grow at a good rate, when I can buy a company that is probably a similar price, a share price that isn't diluted, that will not necessarily increase the same as Google, but has the option to increase and overtake Google's current share price. Why would I not divert to the lower company that I could have more control over, that would possibly grow my wealth better, and I would have more of a say over if I was a big investor, compared to a company like Google that I wouldn't.
Okay, good point. I understand. But a lot of the retail investors they're going to go. That's tough. Because they know Amazon's a fairly solid thing. Like we are almost. I know
Agreed.
in the UK, I'm not sure about how it is in America, but in the UK, we're relatively dependent on Amazon.
Oh, if Amazon collapsed, I think the UK would collapse.
We wouldn't know where to get our crap from.
Yeah,
literally.
It's true.
Like my household, we've got an Amazon delivery rocking up. There's 4 of us in there. There's an Amazon delivery every day of some form. I think we can get friendly with all the Amazon drivers, and we have. There's, it's not the same Amazon driver. It's not like the Royal Mail. There's always a different person, but they just know us. They just know us.
Know your house.
Yeah. Oh yeah, that plane. Okay, we'll go there. Number 5. Why not? So I think it's just they're too powerful at the minute to go in there. They've got a good 10 years left in them, at least.
I agree.
So why not ride that wave? Buy it low now. Or, okay, so at the time of recording, we're before the stock split. Why not put in a good lump sum now and reap the rewards of it spiking?
I think that's more of a better opportunity.
Is that what you do?
I think so.
Fair. That's a trader, isn't it?
Because, well, not only that, but I think you're going to see, as I said, a lot of people come to the market that they can now afford. And people that are not necessarily are educated, people that are just going to say, oh, well, Google's so cheap. They're not going to know what the previous price was or why it's so cheap. They're just going to say, it's so cheap, I'm just going to buy it. And the big investors just going to go, thank you very much, rub their hands together. And, it's not a bad thing because everyone's making money. But it's when the fact is when the big investor finds a price that he wants to get out at, i.e. he's picked a price of he wants to exit at that, and that is in his plan. It's when he exits, and obviously the big investors, the big industrial. Spit out, Budsy. The big industrial investors and companies that are willing to, they can actually move the market because they have such a big holding. If they do that and they move the market, then when the retail investor goes, oh wow, the price is going down, I've got to sell. It can then just slowly decrease, and then they're going to get back in, and it's just going to be a continuous wave. So it's a good thing for big institutional companies. Whether or not the younger retail investor is going to see as much benefit, I don't know. We'll see.
I think,
but I think they will.
I think they will because they'll see a certain amount of growth, not massive growth like previous, but they will see. Anyway, moving on because we get carried away.
Sorry.
I want to talk about Tesla real quick. This is my third topic. All right, I'm dominating this chat now. Again, we're talking about price action a little bit too much in this episode. We're all talking about price, and investing is not all about the price. It's all about the fundamentals underneath. But just to give you an idea of where they're at, we're talking about a lot of price. But so the price of Tesla has rose suddenly about $200 over the last 3 weeks since beginning of March, almost 4 weeks now. And it just highlights the fact to me it's just not a regular stock. It doesn't operate the same as every other company on the stock market.
Not at all.
When I do all my, I did my analysis, I think it was 2020, before it went to the moon. It was trading at $700 a share. And all my analysis came back as don't go near it. It's way overpriced, way over, just don't go near it. It's not worth investing. And obviously it shot up. The price of Tesla shot up to, was it $1,200 a share? It was just ridiculous. Overnight, almost as well. And obviously made Elon Musk the richest or wealthiest man in the world. Again, that's another thing we've got to remember as investors. Even if the analysis says it's not a very good company to invest in because of all the fundamentals, doesn't mean it's not going to go up and down in price.
Yeah, very true.
Go either way. I remember at Amazon, old Jeff, Mr. Bezos or whatever his name is, did an interview during the .com bubble. Obviously, Amazon started in 97 or something like that, and went public then. And the stock price was like $116 a share, and they were getting right to their limit of where they could go to. And he was thinking, there's nothing wrong. All our metrics internally to read the company and which way it's going are going up. We're getting more customers, getting more feedback. Every single revenue, everything was going up. Nothing was signalling that people should sell their stocks. It should just be reinvested. Because the .com bubble, it was the internet. Nobody really knew what was going on.
Yeah,
they were shedding their sales. Still, fundamentally, a great company. So imagine all the people that go, actually, this is a good company, let's buy it now. I bet they're millionaires by now. Anyway, I think it's rocketed because I don't know if you've seen the videos. It was a little while back now of Elon dancing at the reveal of his new car.
And if you haven't seen the video, someone shared it on our page.
Oh, did you?
Yesterday. And the caption was The dance you do when you're about to double your wealth.
Is that what you said?
That's what I put.
Very good.
If you didn't, and I do make some good posts like that, go and follow our social media, especially Instagram.
It's worth it. So obviously Adam's seen it, but I didn't know if anyone else seen it. But he's dancing in front of his car that's being released, and it's fantastic.
He has got rubbish moves, by the way.
It's terrible, but how many CEOs... Well, this is another reason why Tesla's so different. How many CEOs can go to a brand new factory launch, the first cars roll off the lot, you've got people lining up to collect their brand new cars from the CEO? If I bought a new car from Volkswagen, not that I ever would, but Volkswagen own Lamborghini, didn't they?
Yeah.
I wanted a brand new Lamborghini factory. I wanted to get that car, and I wanted the CEO of Volkswagen to be there to hand me my keys. I go, who the hell are you?
Yeah, exactly. Yeah,
give me a car. I want to go. Stop dancing. Give me. But because it's Elon Musk and it's Tesla, it works, and it's hyped it up to this. It's just incredible. It doesn't work right. It doesn't work right. It doesn't work.
Doesn't work.
No, it's abnormal. But also the price of Teslas are rising, just like everything else in the world. They have started putting up the price of the cars because even though one of their fundamentals, one of their like cornerstones of the company is to keep it cheaper as possible, they have to put everything up because of inflation, because of the way the world is. The materials are going up, the cost of fuel is going up, so they can't transport materials everywhere. It's a nightmare. Just like the price of my pasta. So, I don't know if you...
Alex and his pasta.
Tangent thing again. I remember seeing an interview once. It was an MP. I think it was David Cameron at the time, but I'm not too sure. It might have been Gordon Ramsay, I don't know. It was one of them geezers that...
Gordon Ramsay?
Gordon Brown. Been watching too many Kitchen Nightmares.
Oh, dear.
Gordon Brown. I don't know. One of them. It was a long time ago. And they're outside a supermarket, and the media person, the interviewer, goes, how much is a pint of milk? And the poor geezer goes, well, I don't know. And you know what? I said the exact same thing. I haven't got a clue how much a pint of milk is.
Yeah.
Because if I'm buying milk, it's from a cup of tea. So I just need a little bit. Don't care what amount it is. I need it. Or it's for Yorkshire pudding, so you buy a lot of it and you always got left over from tea. So you don't look at the price of milk. What I do look at, which is why the media's like bent itself, because like, I guarantee you after the interview, before he arrived at work this morning, he didn't know what a pint of milk was.
No, definitely not. Yeah.
It's just ridiculous. But I do know what a kilo of pasta cost me at Tesco, because I've been keeping tabs on it. Before the pandemic, 2020, was £1 for a kilo of pasta, a brown Fusilini pasta. It was lovely. Now, just 2 years on, it's £1.30. 30p increase in 2 years.
Yeah. 15p a year.
That's offensive. 30% increase.
Yeah.
Over 2 years. I feel sick. Obviously, that's 30% is the extreme case. Pasta's incredibly cheap. I'm not upset. I'm still buying it.
Of course you are. Well, you need it, don't you? You need
to
eat.
Exactly, yeah. So I'm not upset. But I'm just saying the world is going mad, hurting, as well as my council taxes up. My council tax is up 4.4% this year. You got your letter through the post?
5.6, mate.
Are you?
Yeah, 5.6. 5.6% increase.
And that's not even starting with like national insurance and
that's gone up.
Yeah. So it's income tax. But don't worry, because they've taken 5p
off your fuel. Talking of fuel,
go on.
What's the highest price you've seen?
Oh mate, I've stopped looking. I think diesel was 176 somewhere.
I filled up 181.
Oh, what are you, diesel?
Yeah, diesel.
Oh mate, that's what Pep's better.
181.
That is offensive. I think the highest I've paid is 163.
Oh, that's stupid.
But I'm unleaded, so
yeah, it's different for you.
It is stupid, but how the world works, mate. It's how we've set up our lives.
It is indeed.
We should have seen this coming a long time ago.
Exactly. While we're prepared, this is why we are prepared for the worst.
Indeed. Anyway, Office Gloom and Doom. My subjects are done. I've been ranting on for too long.
All right. Well,
how long has this been going on for?
Don't you worry about that. We'll find out.
Good. I need to hear your surprise.
My surprise is gold. As we all know, in the unfortunate situation that is going on in Ukraine, the horrible scenes that we've all seen, it's just a terrible place for everyone to be at the moment, and our hearts go out to all the families that are affected. But I want to talk about gold real quick. I'm not going to keep you too long like Butson does because I'm short and sweet like that. But when the world goes into crisis, and this is my own analysis that was only brought up when I was actually sort of researching this podcast. Everyone seems to peak towards gold, and I'm not sure why. I think it's just seemed, or it's ever since it was released, it's seen as a solid safety net. So, just a few stats real quick. End of COVID. So, we'll go during COVID. Gold reached £2,063, and that was on the 7th of August 2020. 7 months later, it dropped to 1,674 quid. Okay, so that's fairly decent decrease, but that was when COVID was on the decline. That was when COVID wasn't so much a massive point in our lives anymore. You know, the mandatory face mask started to get declined a little bit, and we could go out and see friends and family and so on and so forth.
Was that during Eat Out to Help Out?
Yeah, and all that, everything like that, basically. Yeah. But when the Russian news came out, and when obviously Russia invaded Ukraine, gold again began to increase in value. Why?
Because people are worried about their other investments.
It's looking,
put their money.
Yeah, it's looking like a safe haven again. And once again, a world crisis has formed, as COVID was. COVID-19 obviously started in 2019 to 2020, and 2021 it was kind of decreased, and as the sell-off happened. The Ukraine war has begun again. We're back to a big world crisis, and once again, gold has increased in value. So it's currently, or it was at a high. Remember, the previous high was £2,063. The high was £2,067. So 2 years later, it's increased the high very slightly, and it's now trading around 1,958. But it just surprises me that this is the way that the world works. It surprises me that people are so worried about having money and other things, and they see that gold is a safe haven. It just surprises me. I don't know why.
It's interesting they think gold is a safe haven.
Yeah.
To me, I'm not too sure why.
I don't like it.
No.
I mean, maybe that's just me being a stupid investor, and that's my point of view. But I just see a materialistic thing that we can get stolen from us if we have on our person that it's a safe haven. It's just like money. Well, money decreases,
yeah,
and I'm sure gold does as well. As I've just shown, it does decrease. So why should it be a safe haven?
Is it because there is only a finite amount of it on the planet?
Well, is there? This is another argument.
Of what we know,
of what
available
we know
to us.
Currently,
say that. Yeah.
The more and more is found. If someone hits a massive gold mine, then what do you do?
Do you not think we'd have found them by now? Because there's enough money in gold to warrant going out and finding them.
You'd hope so, but how big is the world?
Yeah, fair.
And how many places are actually undiscovered?
Yeah, most of the ocean is undiscovered, isn't it?
So what happens if Captain Hook's left his gold in the bottom of the sea? Someone finds it.
But either way, it's not an unlimited. So like Ethereum that can be made.
Yeah,
that's what I compare it to in my head. So Bitcoin, there's a finite amount, if I'm correct.
There is, yeah.
So I can understand why that might have some more value over the likes of Ethereum, because, paper's not the best example, but paper is essentially limitless. While we still got trees growing,
yeah, exactly.
We can make paper,
yeah.
So that's why paper is so cheap, so invaluable. Whereas gold is a finite amount. So I can understand why they think it's the go-to, because I guess obviously our fiat money system. This is an argument against it now. So gold is what we used to use back in DEAR.
Yeah.
But now an argument against that is if our fiat monetary system collapses and it just doesn't work anymore, we go back to trading each other like
coins and shoes and whatever.
Yeah, like services. I don't think gold's going to be the one. I don't think that's what everyone's going to turn to. So I don't see a point in personally investing in myself.
No, I don't either.
Just go to, can you do this for me if I do that for you?
Yeah, can you cut my hair for a scratch your back?
Yeah, exactly.
Simple. But it's just a surprise. It was a surprise to me. I never really looked into it that kind of way. And obviously, I'm still a fairly new investor. But it surprised me. It surprised me that it made that much of a change. It's changed $300-400 pound. Sorry, so it's a bit of a change for me. My pick.
Your pick
is Garmin. Now, why Garmin? Garmin's not really a well-heard company. Garmin's quite quiet. Garmin's understated. It's
Garmin. I had a Garmin sat-nav about 10 years ago.
And I think all of our parents probably had the Garmin sat-nav, and they probably still do. And it's like, well, realistically, not many people think about Garmin, but I've seen more and more people wear the Garmin watches and the Garmin brand. And they've come onto the golfing scene as well. They'll see when you hit a golf ball, it tells you how far it's travelled.
Yeah.
How close it is to the hole. It's unbelievable, the tracking sort
of
stuff.
How does it know that?
Not a clue. But it's pretty accurate. It's pretty accurate.
Wow.
And overall, it's a very, very, very wealthy company. It's got, and as we all say about cash cushions, it's got 5.8 months worth of cash cushion. And a company that size is pretty impressive to have, you know. They can clear their overall debt, and to be honest with you, I couldn't find much debt, but they could clear their overall debt fairly easy in 1.5 years.
What is their just debt figure, accurate?
I don't know. You have to go and search up that. I just want to keep it simple.
Okay.
It's not much though. I can tell you, but it's on my spreadsheet. And as a brand, it's always evolving. They're always bringing out new products, the new watches, the latest piece of software, and they've also acquired a company that make sat navs for planes, aviation. Okay. So they're also getting into that field. So they've got the boats. They make navigation for boats. They make also the wearables. So you know the GPS devices and the golf stuff and the watches and so on and so forth. They're getting into aviation, and overall, it's just I think it's a really, really nice brand, which is why I use it as well.
Have you got a Garmin watch of it?
I do, and I absolutely love it.
Yeah,
it's amazing. So I was interested in this company when it hit a price of 107.9. And I wanted to buy, but I still thought, again, the trade in me, it's overvalued. I think it's going to hit 100 flat, and I'm getting in at that level. I'm fixed. What happened? It's gone up to 116.8. So, you know, I thought the company was overvalued, and I should have got in at 107. And it's not a big deal. I can still buy at 116 and be happy with the progression and rate of.
Because you're still happy there's a good company, underlying company.
It's a great company. It's a great company with great credentials, with great financials, with a great background, with a great CEO and a great team, and they make really, really good moves. So it's a great company overall to me. And I'm still very, very interested in that company. But it's just a pick. And that was one of my picks, and that's one thing that I'm going to be looking out for. So people, make sure you look out for it as well, because you never know, you could jump on the bandwagon and make some cash.
This is not financial advice.
This is not financial advice.
Do your own research, but we're just talking about stuff that interests us in the market and what excites us, aren't we, basically?
So, end of Q1.
It is.
It's gone quick.
New financial year for us in the UK.
It is, and it hasn't really gotten off to the best start for us in the UK, you know. No. We'll talk about that in coming episodes. Obviously, the world is in despair over the Ukraine crisis, and, you know, oil going up in value, and people are, you know, thinking the world's about to fall apart. But I'm sure it isn't, and I'm sure we'll continue. And I know we'll continue to keep showing up.
Without a doubt.
So, anything to add, Butson?
Nope.
No? Okay. Guys, thank you very much for listening. I hope you enjoyed this episode. Again, this is just a lovely little episode about what we're looking out for, and what surprised us, what shocked us, and one of our picks. And just general chit-chat about the market conditions and the current state. As we said, if you haven't already, go and follow our YouTube channel. We're going to begin to release videos of the podcast here, so you can see our lovely faces talking and see what we talk about and how our little silly hand movements are, so you can actually put a face to the voice. Also, don't forget to go and follow our socials as well. Instagram, Twitter, and Facebook. They're all available. Links will be below. If you have any questions, fire them over. We're always open to answer, and you know, we welcome any questions. That's what we're here for. We're here to help. Yeah, have a good weekend, guys. Enjoy. I wish everyone all the best. All the best in the UK for the new financial year. Hope you make some real good gains. And yeah, see you in the next one.
Success is available for everybody, so why should you step to it?